What a phenomenal ride it's been for cryptocurrencies. That slide in crypto prices have been phenomenal, breathtaking to say the least. $2 trillion wiped out from a peak of $3 trillion. And along with it, crypto hedge funds, crypto lenders, Terra, Luna. For those of us waiting to see the end of the crypto winter, well, you may have to wait a little longer. Mike Novogratz, in July, you said we've seen the worst of cryptocurrencies. You said it was time for Bitcoin to rise. Here we are 2 months on. Bitcoin is down 60% year to date versus the S&P, which is down 22% in the same period. What happened?
Well, since July, Bitcoin's pretty much at the same level. We went from 18,000 to 22. We've come back to 19.
Volatile.
You know, in context, it's a very young asset, and volatility is coming way down. I like to look at the bright side. In this past month, really, with the S&P getting crushed after CPI, you know, Bitcoin's only down 5%, with the S&P down 10. The story for Bitcoin, right, the story of Satoshi was that Satoshi saw populism coming. What is populism? Populism is when governments want to spend more money than they have. What just happened in the United Kingdom? They've got an energy crisis, and the new government said, you know what, let's pay for everyone's energy bill, and let's cut taxes on both the poor and the rich. What did the markets do? Crush the currency, crush the shape of the yield curve of the bond market. That's the Bitcoin story. And so what we're seeing in live time is the reason all the Bitcoin maximalists and all the crypto people got involved in the first place. We're seeing the debasement of fiat currency. If you thought about Bitcoin this year, not just versus the dollar, but versus the yen, the Chinese currency, the euro, the pound sterling, the Mexican peso, the Korean won. If you looked at Bitcoin versus a basket of currencies, it's done about 20% better than versus the dollar, right? And so I kind of think this is a really interesting time. Can Bitcoin rally if stocks are getting crushed? Probably not a lot. But as soon as you hit some equilibrium in stocks, I think Bitcoin's going to take off. Because I don't think it's possible in this environment with debt to GDP at 130% in America for good stewardship of government, for politicians to say, we're not going to spend, we're going to tighten our belt in tough times.
But you're talking about an asset that was set to be a hedge against inflation, yet here we are.
Well, listen, Bitcoin went up because central banks were printing money ad infinitum, and that was going to cause inflation. That's why Bitcoin went up from 6,000 pre-COVID to 69,000. So it was a pretty damn good hedge. Now, what happened since then? Chairman Powell and his other central bank, brothers and sisters said, this is a problem. I'm going to act like a central banker. I'm going to find my central bank suit and hike interest rates and hike them aggressively. So that's deflationary, right? And so it worked perfectly as a hedge versus inflation. It went from 6,000 to 69,000. When the central bank decided to beat inflation with a stick, of course Bitcoin came down, as did many assets.
The central bank has to beat inflation with a stick because it's surging at 40-year highs. But having said that, where do you see the bottom? How much more downside? This is a central bank, as you said, is committed to bringing inflation down. The whole slide has been exacerbated by a central bank that is tightening monetary policy, and that will persist.
Yeah, so what's complicated, right? Inflation is always complicated. It comes from supply shocks. So right now we have this massive supply shock going on in London. What do I mean by supply shock? It means Ukraine and Russia go to war, Europe relies on Russia for gas and oil. There's a monster energy squeeze in Europe, and it's creating unbelievable European inflation. That's not natural inflation, right? It's not going to go away until either the war ends or they get new sources of energy. But that creates inflation. It also created food inflation, right? Ukraine is the bread basket of Europe. Lots of food produced, and so all of a sudden you saw food go up, fertilizer went up. And so you had some what I'll call artificial inflation, supply shock. You had a lot of demand-driven inflation, right? When you give free money forever, people are buying stuff, they're getting wealthier, then they come back from COVID and they want to spend, they want to travel. And so price of labor went up, price of rent went up in the US. That stuff has to get unwound. And Powell is raising rates. I think what he'd like to do, and he told us this in July, he's raised them a bunch and then wait to see how it happens. The market took him on with that comment. And now he's in this very awkward place where he needs to put the economy in a recession. The economy is going to go into a recession, right? Rates just went from, 2 to 4.5 in the UK, from 2 to 4 in the US. Mortgage payments, where companies borrow money, all radical shift. We've had the single largest drop in wealth in America ever in the last 5 months. $9 trillion alone out of the stock market. The bond market far bigger than that when you add corporates and government bonds. And so the wealth effect is going to happen. And so our economy will slow, and it'll slow a lot. It's just, in the short run, you still have a services economy that's pretty hot.
So what does it mean? Are you then saying that the bottom is going to come, but not for a very long time?
I don't know when the bottom's going to come. The bottom could, listen, we're in a, I was laughing, this conference feels so good, and everyone's having fun, and I'm like, do these people in the audience not know that the world is blowing up outside, right? The bond markets are in complete collapse. This is a 2008 financial crisis going on in financial markets. Bond markets are having the biggest moves I've ever seen in my career. Equity markets getting killed. And so you're really having a breakdown. Usually that energy can't last forever. We'll hit a parabolic top. You might hit it this week, you might hit it in a few weeks. But moves like we've seen in the last 4 weeks, 3 weeks, 2 weeks, don't last forever.
What are the risks yet to surface as we see cryptocurrencies fall?
Well, let's talk about the real markets first, then I'll switch to crypto. People don't know they're fired yet. When companies are getting hammered like they are, there's going to be a response. Demand's going to fall for their products, people will get laid off. And so there's a recession coming, and that then needs to get priced in, right? So have equity markets sold off enough?
So you're saying it's not been priced in fully yet?
I think equity markets probably in the US, the S&P can probably go as low as 3,000, 3,300, and it's at 3,600 now. So that's another 10 to 15%. Will it go there in a straight line? Absolutely not. It'll bounce, everyone will feel good, and then it'll roll over again. What does it mean for crypto? Crypto is pretty freaking interesting. Why didn't crypto go down in the last few weeks? When we had the big deleveraging with Celsius and Voyager and Three Arrows and all these providers of leverage that went belly up, if you had to sell, you sold. And so crypto had a massive sell-off, right? And then it bounced. There are not a lot of forced sellers left. And so we're in this weird equilibrium where there are a few buyers, there are a few sellers, and there's not that energy in the market like you're seeing in the equity market or the bond market where you have to sell, right? The leverage is way out of the system in crypto. There's also something that I sense from my travels, from my meetings, both with institutions, with young people. The word inevitable keeps coming up. There's a sense of inevitability that we're in the right space. Inevitable that Bitcoin will have its day because at one point with 120% debt to GDP, the US will not be able to really not monetize its debt. That Web3 in time will be a big part of the gaming space, brands, NFTs, like Web3 will be a thing. Ethereum did the merge. That was an unbelievable accomplishment. of a community getting together to attack and solve a stunningly complicated computer science problem.
You talk about inevitability, and cryptocurrencies were, at the very start, targeted at the unbanked, yet where we are right now, only 14% of the unbanked have adopted it. And when you take a look at demand for cryptocurrencies over the last 12 months, perhaps, you're seeing a decline when it comes to cryptocurrencies as a form of payment, but perhaps for gaming, you'll see an increase. I mean, how do you make sense of that? What inevitability are we looking at?
Listen, we had a speculative mania in 2017, right? Bubbles, if you study bubbles, financial market bubbles, they always happen around technologies that change the world, right? Think about the internet bubble in 1999. It went crazy, right? Pets.com and all these, crazy companies, and then it crashed, and we didn't really get the internet for years later, right? If you think about Facebook and the iPhone, that was 2005, 6, 7. 6, 7 years after the first bubble. So in crypto, we had a bubble in 2017 because the story is so powerful. It's the story of people not trusting the center, people wanting to have a decentralized system where you don't need to trust the government, where you don't need to trust, if you're in Canada, Trudeau decides he doesn't like you protesting the truckers and he freezes your bank account, right? Or the privacy invasion that you're gonna see if you're using the CBDC in China, or I can give you 15 different examples. And so people said, hey, this is my movement. I don't trust old people in lots of ways, right? It was a Gen Z millennial revolution, and it was global. That's a powerful story. So in the 17 run, it was mostly story. I think I made a good living because I'm a storyteller. And then we had the collapse, and we had a monster collapse. Remember, it collapsed 90%, 95%. In the 2021 run, right, it was really generated by COVID. After COVID and the monetary response, people said, oh my God, now I get why Bitcoin's important. But we also got what we called the digitalization of everything. And so Ethereum and all the other level ones started really accelerating the work to build a shared blockchain that we could build companies on top of. And I would tell you that the price action in 2021 was probably 80% story and 20% utility. This next bull run is gonna have to be 50% story, 50% utility. And so, and I'm seeing it's people building applications, people building systems, A, that are fast and scalable, and B, that are user-friendly. We don't have them yet. That's why we're where we are. But in the next few years, they're coming.
I want to talk about the fallout. We've not seen Max Payne, and you have said that you foresee 2/3 of the 1,900 crypto hedge funds will disappear, will dissipate, will go into thin air. Where are we now? Are we close?
So hedge funds normally work on an annual basis, right? They have redemptions, some every 3 months, some every year. And most people will stick around longer than they think because they're hoping it comes back. I don't think there's a bailout coming for lots of funds that are down 60, 70%. I just don't. And then people look at the math and they were like, I'm not making enough money. It's a long way back in the high water mark. And so I think a lot of hedge funds will go out of business. A lot have. We'll know a lot more in March, post year end, when people decide, what am I doing for the next year? Listen, that's the natural part of any evolution of a business. What's kind of more exciting is how many institutions are lining up to get in the space. If you had asked me on Christmas Eve last year, what I went to bed, what present I was hoping for, what prayer I said, please, Santa Claus, bring me a present, it would be that BlackRock put crypto on its Aladdin platform. Right? BlackRock is the largest asset manager in the world, $7 trillion, down from $10 trillion. And they have a platform that all their institutions can use. And they said this year, after having been skeptical in 2020, 2021, we're gonna allow Coinbase to have a product on it, and we're gonna put our own product on it. That's a big, big deal. And I'm seeing that with every institution. Citadel, probably the greatest hedge fund out there right now, or at least the most profitable hedge fund out there, teamed up with a bunch of people to do an exchange, a regulated exchange. And so everywhere I go, I see people moving into the space. Just in this trip alone, I met, the guys from Animoca. I mean, unbelievably talented people getting into the space. And the investors that are coming to those businesses are the world-class investors from the US, Europe, and Asia.
Needless to say, Mike, there's been a lot of pain on balance sheets, including at Galaxy. How are you navigating?
Ouch.
You haven't been spared, but how are you navigating this crypto winter?
Listen, we were smart or lucky in that we sold a bunch of stuff last year. There's two philosophies. There's a philosophy that people get a lot of tokens, they'll never sell the token. It's just not the way I was raised. I was raised, as a speculator, as an investor. And so when I buy something and it goes up 10x, I take a little bit of profit. If it goes up 100x, I take a lot of profit. And so we sold a lot last year. We've lost money this year because we have a big balance sheet and it's down. We hedged with interest rates. We hedged with equities. And so the pain is not as bad as it could have been. And when I add last year and this year, it's still a pretty big pile of chips, even though crypto's at a lower level. I would advocate for both individual investors, for companies, you have to risk manage when you're in a 100 vol asset class, or even if it goes to a 70 vol asset class, you have to risk manage, right? Trees don't grow to the sky. And so if it's, you name it, Ethereum that you went up from 1,000 to 4,000, you got to take some chips off the table. Buy your girlfriend a present, buy your boyfriend a present, put some in the bank, pay your taxes.
Are you hiring? Are you positioning for when we see the end of this winter?
We have about 395 employees right now, and we started the year under 300. And so I consider that a growth company.
Are you planning to hire in the next 12 months?
We're probably going to slow the pace of hiring down. Like, listen, business is slower than it was. We're trying to build through, right? We've got a project to build Prime. We've got all kinds of projects that we want for when the institutions come. Crypto will take off again the moment the Fed flinches, right? Bitcoin will at least, and Bitcoin will drag the rest of crypto up. But it's not really going to take off in a sustainable way until we get Web3 projects that are used by masses. And that's coming. That could be 18 months, 2 years. It's coming. I met with a guy this morning who was brilliant, who's building something for one of the biggest game companies in the world. And I think you're going to see a lot of blockchain uses, NFTs are kind of the Trojan horse of the blockchain. They will lead the kind of crypto revolution in lots of ways. And you're going to see them in video games and in other places.
You've been looking to expand your reach, institutional reach, geographic reach, and you were looking at the deal with BitGo. That fell through. What's the story there?
BitGo's a great company. I liked Mike Belshie, and it's a shame the deal didn't happen. The regulatory environment in the United States is frustrating, and it is slow. And, when a deal takes as long as it did, we had a right to break the deal, and we chose to because there was no confidence on the timing of when this would happen. And all of a sudden, it's like getting engaged, and you said, we're going to get married in June, and then it gets postponed and postponed and postponed, and at one point the energy goes away.
But BitGo says that it has fulfilled its obligations.
We can agree to disagree on that. And listen, in business, there are plenty of things where you can like people and have a disagreement. You can litigate it. It's not the end of the world, and we're moving on.
Regulation, of course, a huge issue within the crypto space. We've seen the arrest warrant for Do Kwon. When you heard that news, what came through your mind?
Listen, the terrorist story is a great lesson for the community. Do is one of the smarter guys that I've met, right? And I sometimes think that cockiness or that intelligent success created cockiness and a vulnerability that everyone bought into. What's interesting is it was all public, right? It wasn't like he was hiding the algorithmic stablecoin and how it worked. And it was a lot of greed. Anchor Protocol was offering 18%, and people wanted that money. People have a overblown understanding of our participation. We were just investors. I only met Doe twice. I had fun with him. I liked him. I was impressed. I invested very early. And like we do with every token, we sold along the way. And so it was heartbreaking when the whole thing collapsed. And, I hated that people lost fortunes. A lot of them had made fortunes and then lost them. But it was also a great reminder that this is new technologies. When trees grow to the sky in 2 years, when a token goes from 20 cents to $100 and you don't take any profit, that's lunacy. Right? That's just, it makes absolutely no sense. And so you need a risk management methodology, or you're going to have more of those things. What was interesting is, listen, in Korea, they have a long history of throwing people in jail. Chaebol founders, politicians.
It's gone to the Interpol, though.
I'm sorry?
It's gone to the Interpol.
And we'll see. I wish him well. There were other things that happened in crypto that I was much more frustrated with, right? Three Arrows Capital, that seems more fraudulent. Outright fraudulent. Or things like Celsius, which might not have been fraudulent, but was so aggressively irresponsible, taking consumer deposits, leveraging them up 30, 40 times, borrowing short and lending long. And so as an industry, we did a horrific job self-regulating. It is no surprise that the regulators want to come regulate because we failed the self-regulate test. What's interesting to me and really promising to me is that true DeFi, true on-chain protocols. I saw Stani up here, right? If it's Aave or Compound, they had no issues. People made or lost money. The protocols, for the most part, worked exactly like they were supposed to. And so it's a real advertisement, ironically, for on-chain, right? It was the centralized companies run really poorly that blew up.
Is there a sense that investigations would lead to more people, more countries? Is that the sense you're getting?
In any frenzy, right? And both 2017 and 2021 was a frenzy, right? It's not natural that you buy something and it's up 20x 2 weeks later, and you're complaining that it's not up 30x, right? When you have that kind of energy coming into a space, there will be bad actors. There'll be frauds, there'll be Ponzi's, there'll be charlatans. I hope they get weeded out. I hope some end up in jail. I do think why I love crypto is at the core of crypto, right? When you meet with Vitalik, he's my hero in the whole space. There's a group of people trying to build a new financial architecture, a new consumer architecture that's more egalitarian, that's more fair, that's more efficient, and that will take us into the new age. And those people are who I focus on, not the frauds.
What would you say to Jamie Dimon? Because he says cryptocurrencies are decentralized Ponzi schemes. What is he not getting?
Jamie, he's great on stage, and he's an amazing CEO.
He's not alone, though, right? Warren Buffett.
Again, I could put Stan Druckenmiller and Paul Jones and Abby Johnson and Jeff Yass, some of the greatest.
But what we're seeing from the crypto space right now kind of justifies what he's saying.
Well, yes and no. The day before COVID happens, I whisper in your ear, you can buy Bitcoin, this magical internet money, or you can buy Zoom, this technology that everyone on the planet's going to use 8 times a day. If you bought Zoom, you've made no money. If you bought Bitcoin, you've doubled your money. And so to say Bitcoin hasn't performed is just wrong, right? It has 160 million people own a piece of Bitcoin. It makes it the 8th largest country on earth, right? Think about what that is. That's in 13 short years. 150 million people in every single country on the globe has decided they will take some part of their hard-earned savings, which they toil for or they inherit from their parents, and they will place it in the trust of this community. That is stunning. It's to some degree a miracle that a community can create a bond like that, a brand like that so fast. And so to judge it on its last 6 months or its last year or the volatility, it's a 13-year-old experiment that has become literally a nation state. And I actually think we'll look back in 4 or 5 or 10 years when it, regains momentum, and you'll be like, this is one of the coolest things that's happened in finance.
We're out of time, so it's just one final question. You've said before that you're good at selling the dream. You can get people to say hallelujah. For those
Give me a hallelujah.
For those non-believers out there, how are you selling this crypto dream?
Listen, crypto's not one thing, right? There is Bitcoin, which I see as digital gold. Like, NFTs were amazing because all of a sudden, you didn't have to be a Bitcoin person to participate in NFTs. Nike last year, right, the shoe company, made $175 million selling NFTs. So you're going to see every major brand, we're talking to them in the last few months, Netflix, the K-pop, bands, use this new technology, right? What Satoshi gave us was private property on the internet. Before Bitcoin, there was no private property on the internet. The internet was feudal, right? If you studied history, John Locke said there is no capitalism without private property, right? So you had an internet that was non-capitalistic. He gave us private property. And so you're going to see this in so many ways. What Web3 is this ability to transfer value. That starts with private property. And so every single citizen on the planet is going to interact with an NFT, with blockchains. It's just inevitable, and it's a matter of time.
Ladies and gentlemen, Mike Novogratz.
Thank you.